Hi everyone, this is Rob Roy and welcome to the Elliott Wave Elite U.S. Market Update. Well, what a week it was in the U.S. markets, as I'm sure everyone's aware of by now. We had a big move to the downside. Notice in the chart the Elliott Wave pattern has relabeled, and I know that confuses people at times, wondering why does it do that. Well, remember, the market's dynamic and Elliott Wave is dynamic, so it moves with the market. So let's take a look and go back with the walkthrough button and look at where we were with the markets. We had this wave 3 higher, and we had the forecast of where the wave 4 could go. And then if we advance the chart, be able to see that there's a movement to the downside, but it's a volatile move to the downside. And when you have big volatility to the downside and you move further, the Elliott wave looks at that as not a legit wave 4 correction. It rebalances the data that it collects and looks at where's the next likely move to be. So we moved down too far too fast for it to be just a normal wave 4 correction. So we moved into these ABC corrective patterns. Where will the market go from here? Well, we'll wait till the pattern gives us a next signal. If we move to the SPY so we can bring volume into the mix, you can see, as you would expect, there's always more volume to the downside, especially when you get these volatile moves. And you can listen to all of the different pundits on the networks talking about reasons, because it seems like they have to have a reason every single day. I really think it boils down to the fact that we've had a Federal Reserve that's been on the dovish side, has been quantitative easing. They've been injecting liquidity, and now they're withdrawing liquidity, not just from raising interest rates, but from selling their own bonds and unwinding their balance sheet. And markets need liquidity. I don't care what earnings are, any of those things. If the liquidity is being if liquidity is being withdrawn from the markets, they're going to go to the downside. It's simply how it works, and that's what Elliott Wave is reassessing now, because things have changed. We don't have the same liquidity in the markets that we had. Looking at the VIX, boy, we had that big breakout. We talked about this. We talked about this long descending triangle. Remember, triangles are one of the primary Elliott wave corrective patterns. And we said that something was going to happen, and something did happen. We exploded to the upside with volatility, which me personally, as an options trader, I love when we have volatility. So that's exactly what we want to see as far as things moving and moving quickly, because we can make money faster. That's the bottom line. Looking at the U.S. dollar, the dollar and interest rates are going to get a little bit convoluted now. There's the trade war going on with China. There's evidence that China is selling some of their bond holdings, but they can't go too far because they need the U.S., the largest consumer in the world, to buy all the stuff that they make. So there's this back and forth, and Trump calls it negotiating tactics. We'll see how it plays out. But as far as where the dollar and interest rates go over the next several weeks, I think is a bit up in the air. We could be in the wave 4 now of interest rates coming back down, but there's a tremendous amount of support here at that previous wave 5 high, and a little bit of resistance at the 31 level. We'll see if we're able to hold that level, or if we bounce through it and move to the wave 4 as forecast here. So if we move down and stay at this 31, we could still be in the wave 3 to the upside. So that'll give us the clue. If we break below that, then we're very likely in the wave 4 correction. If we just come down and bounce off the support level, that could be normal course of business within the wave 3. Looking at some of our case study, I just wanted to show you this one because this was one of our triangles, remember, that we had on CLR. We've talked about this each week, and then we talked about how we had this one head fake to the upside, then a head fake to the downside, and then we had the move to the upside. And I mentioned that usually you don't get 3 head fakes, and that did turn out to be the move that generated the gain in the position. And when you have a strangle, you are buying a call, buying a put. Well, in this case, there was no reason to sell the put option because it was basically worthless. Why pay the commission to do it? And you just hold on to it as a bit of a lottery ticket. So when we exploded to the upside on CLR, we had a 28% gain. Well, that put regained value as the market came back down, which moved our profit from 28 to 39% due to the fact that the put came back down. And you might think that rarely happens, but it does happen. Not all the time. It doesn't happen every time. But another rule of these triangles is when you get one of these breakouts, quite often the breakout is retraced. So why close out an option and pay a commission for next to no money when you can hold it and again acts as a bit of a lottery ticket, whatever, and we come back down. So I did want to show you that with CLR coming back down, we were actually able to regain value in that put option and increase the overall percentage profit in that trade. So we take a look at MasterCard. Looking at MasterCard here, we can see that with the move to the downside, we are still in the Elliott wave to the upside pattern. We've only had a 24% correction in that. When markets move significantly, they tend to move with the market, but only a 24% correction. That's still an Elliott wave pattern to the upside. So we'll hang on to this one for now. I clicked on Maximus there a second ago. Remember, that was the first loss that we've had in over a year of doing these events, or doing these recordings. And then we look at Activision. Same thing. We're at the 55% corrective level. We gapped up, filled that gap. So we'll see if that continues up. But it's also still within the range of the wave 4. And if this market volatility comes to a close and does start to turn back to the upside, these will move with them. But we do want to also take advantage of where we are with this downward move in the markets. So we're going to set up, and again, we've been doing these recordings for a year, and it took us a year to have our first losing position, but they've all been to the upside. The market's been moving to the upside, so that's been quite helpful. We've had strangles, we've had our upward Elliott wave patterns in the directional patterns, lots of butterflies. Now this is a downward moving chart, and it's in Baidu, which is obviously a Chinese company. And with the friction that's going on between the U.S., plus there's a lot of people that think there's some seriously questionable accounting with Baidu. Now I want to make sure that I'm stress this. When I put into Integrated Investor, you can do this in Profit Source, my parameters for a trade to the upside using Elliott wave, I want it to be off healthy stocks. So I run the Elliott wave parameters off healthy stocks, which is an amazing feature that is included in both Integrated Investor and Profit Source. So you can actually pick the stocks that have good solid fundamentals. Well, if you're trading to the downside, are you wanting to trade to the downside on a stock that has really good fundamentals? No, right? I mean, if it has bad fundamentals, that's helpful to the downside. So when I run the search for the downside positions, I take out the healthy stocks and just run it off the optionable stocks. So here we are to the downside. Now look, we've already hit that wave 5 target. So you might say, well, you already hit the target. Why are you doing this one? Well, with everything that's going on, I believe that we could very well have an extended wave 5 out of this position. So if we do the wave 4 retracement, you can see right where we were with the Fibonacci retracement. Then we do the Fibonacci extension, and if I'm right and we get an extended wave 5, the target for Baidu is going to be down here around 168. That would be the 100% extension, which is the extended level when you have a 38.2% corrective level. Now, I again want to be specific. I don't like to use those out-of-the-money butterflies. The out-of-the-money butterflies I love with upside Elliott wave patterns. They're inexpensive. They have high potential returns, easy to manage, etc. And then time decay becomes friendly with the setup of a butterfly pattern where you're buying 2 legs and selling 2 legs. But on the downside, the issue becomes the downside can move so fast and you can go from a 100% downside extension to 161.8% extension in like a day and blow right through your downward butterfly. So me personally, I don't do the out of the money butterflies to the downside. So in this case, volatility is a little bit higher, so I wouldn't want to do straight puts either. So I'd be looking at a debit put spread for this expected continued move to the downside. Now maybe we just come back and test the low, but I do think there's a good possibility that we have an extended wave 5 to the downside. This is a bit more of a speculative trade than the ones that we've been doing over the previous years, so I want to make sure that I'm specific on that as well. But we'll see how this plays out. But what a really, really good wave 5 to the downside pattern. And then even though we don't use fundamentally sound stocks, in a way, or for downside trades, in a way the fundamentals work in our favor based on all of these concerns about accounting irregularities, etc. within Baidu, the fact that the Chinese economy is hurting, and then we have this, call it a mini trade war, more of a skirmish back and forth between the U.S. and China. So that's going to be our next case study to keep an eye on. Hope you've had a wonderful week. It's been a great week for us trading the way we have. It's been an extremely profitable week. So hope it has been for you as well. Things move so fast to the downside, and when you're positioned to take advantage of that, it's a lot of fun. We have higher volatility. It's going to be fun for a while. Take care, everybody.